forward. So anyways, let's get into this Sitifel report, this analyst report that has a lot of interesting insight pertaining to the amount of revenue Voyager did in April and some new perspective on assets under management and revenue growth. So one thing that I do want to mention before we get started here, Sitifel GMP, I think they're an analyst firm that do a good job of covering Voyager, because Voyager is a company that is very, very changing. Let me put this into perspective. Normally a company, you analyze it once and you'll probably not have to analyze it for the next few months or even a couple quarters. With Voyager Digital, they're growing at such a pace where you need to keep track of this company every single week or you miss out on key news events, which is what I try to do with my videos. Keep you guys up to date on new things that happen with Voyager. I think a lot of analyst firms out there, potentially update their price targets or their analyst reports once, maybe in February, March, April, but miss the bigger picture, especially here in May. So what I think Sitifel GMP does, they do a good job of covering the stock significantly to where we have reports every time Voyager releases potentially monthly data or things along those lines. So let's get into it. Voyager announced continued strong momentum for April 2021 this morning. When the funded accounts increased by 130,000 and assets under management surpassed $3.3 billion, while average spreads increased by 45% month over month. We know this, right? So Voyager gave us these numbers. They're just summarizing it. This puts management on track to reach its target for 3 million accounts by December 2023, although average assets per account need to double for Voyager to reach its target of $50 billion in assets under management. This is a very good point here, guys. Voyager originally had a target of $50 billion in assets under management by 2023. This was on their investor relations page in March. They kind of took it off now, not sure why. But, for this goal to take place, they need 3 million funded accounts. But what Sitifel GMP does point out, and does a good job of pointing out, is the fact that assets under management, or average account size, needs to double from now until December 2023. So when we look at, this average account size doubling, this will happen for a few main reasons. An increase in potential cryptocurrency prices, new products, and just generally customers depositing more money onto the platform. So with time, I think a double up will eventually happen, but that is important to note that that is one of the things that needs to happen for them to reach $50 billion in assets under management. Our math suggests April revenue of $42 million, a little more conservative. April up 68% versus our $25 million estimate for March, and higher than the $29 million monthly run rate implied by our Q4 2021 forecast of $87 million. First thing to note here, guys, Voyager's fiscal year is different than the normal fiscal year. Their Q1 of 2021 actually started in, Q3 of 2020. So when we're talking about Q4 of 2021, we're really talking about Q2 of this year, April, May, and June. So their first quarter of 2022 will start in essentially, going into, July, August, September. So we're going to talk a bit more about how they actually got this figure here of revenue in the back half of this report. Let's keep going. Annualized, this implies $504 million a year, ahead of our fiscal year 2022 estimates of $412 million. So that's obviously, the end of June of this year to June of 2022. That's essentially their fiscal year. And again, I just want to really reemphasize that, of $412 million. So we're already ahead of their next year estimates based on what we did here in April. And again, these are conservative numbers, and I'm going to go through that in a second here. And implies a valuation of 7.2x enterprise value to sales. Very cheap for a company, with EBITDA margins of over 50%. Again, let's keep going. We think Voyager is executing well and has several catalysts on the horizon: international expansion, new product launches, uplistings. If you've watched my videos, you'd know that the CEO of Voyager is focused on these three main things: international expansion to Canada, Europe, new product launches. We talked about a lot of them just yesterday: expansion into equity trading, margin, loans, debit cards, credit cards, etc. Our target price of 55 Canadian dollars is based on a multiple of 15.5x forward 2022 estimated sales of $412 million, and then that's the conversion rate from US dollars to Canadian dollars. So first thing I really want to point out here, they're using $412 million in sales to come up with this price target. I really do think that this is conservative at this moment in time. $412 million is kind of a joke looking at next year. Just the fact that, based on their cheap targets, we did $42 million in April. That calculates to a annualized revenue run rate of $504 million. So at the very least, use 504, right? So, in this situation, I just want to see what their, obviously Canadian target translates into United States dollars here. For anyone who owns a US stock, that's a target price of right around $40.70. Pretty big upside, to be completely honest, right around 80 to 90% upside in the next year, given their targets. Now, when I look at my numbers, I have different things, but let's take a look at their reasoning behind all of these different things here to come up with a better conclusion. Key points. April updates point to strong momentum. Voyager provided an update this morning. Again, key metrics, key highlights are be able to read through down below. All right, let's do this. Funded accounts up 130% or 130,000 month over month. Voyager said it onboarded 130,000 new funded accounts on its platform in the month of April. We estimate new funded accounts to be at 402,000. Again, huge growth, up 48% month over month, slightly lower than 58% month over month in March. Again, this is just a law of big numbers. As they gain more funded accounts onto the platform, the percentage month over month increases will decrease. But that doesn't necessarily mean the actual funded accounts month over month will decrease. It just means, law of big numbers. As numbers increase in size, the percentages decrease. We think growth in new account additions reflected higher activity in altcoins. Again, that's one of the big reasons why we saw such a bump in revenue. Obviously, altcoins are much more profitable for the company, where Voyager has greater differentiation in the market. Furthermore, this puts management on track to reach its goal of 3 million accounts by December 2023. Assets under management, $3.3 billion. Just a lot of stuff about growth here, and just reiterating that average account size need to double in order for them to reach that $50 billion in assets under management. And again, if you believe in cryptocurrencies and believe in the new products of Voyager Digital, there is no reason why average account size can't double from here. Average basis points per trade. And then this is very interesting, guys, because this is where my projections differ from theirs. Average basis points per trade up 45% month over month. We know this, right? This is the average basis points per trade, not just for altcoins, but for all transactions essentially on the platform. We're 45% more profitable in the month of April, essentially. Given our baseline estimate of 90 basis points average spread in March. See, this is very interesting. I want to show you guys my projections here. In February, we saw essentially a percentage of principal value traded going down to revenue of 1.25%, meaning for $1.6 billion in traded volume, we saw $20 million in revenue, right? And what they're saying here is that their expectations had this number decline 30 to 40% month over month into March. There's no reason that should happen, especially given the fact that March was also a very strong quarter when it comes to new additions in altcoins. So, I think worst case scenario, there's a situation where maybe that percentage is 1.15%, a bit of a decline. But even in that situation, assuming that 45% increase, we still get over $50 million in revenue for the month of April, significantly higher than their $40 million estimate. And given that, I think they're being very, very conservative with this number here of only 1.31% going down to actual revenue here. I think that's very conservative, and that's the main reason why our revenue projections do differ in value. Let's keep going. This is obviously higher than the prior peak of 100 basis points in February. Guys, they reported $1.6 billion in principal value traded, and they reported $20 million in revenue. There is no hiding the fact that 1.6 billion multiplied by 0.0125 is 20 million. So there's no reason why, if this was 1%, we'd have $16 million in revenue. So that's very important to understand here. And, even using their numbers and assuming a bit of a decline into March, we still get over $50 million for the month of April, which is over a $600 million revenue run rate at this moment in time on a yearly basis. Furthermore, to take advantage of this increase in altcoin usage on the platform, management said it expects to increase the amount of altcoins significantly over the next 60 days. So now let's get into a deep dive into their revenue estimates. So they said, revenue exceeds 40 million on a monthly basis. I think this is very conservative. They say it's 42 million based on a 1x turnover in average assets under management. I agree with this. When we look at history here, in the month of February, $1.6 billion in principal value traded, $1.7 billion in assets under management. January, same exact thing, a little more principal value traded than assets under management. And in the month of March, again, right around that same amount. So it's very important to understand the fact that what we look at assets under management, the value traded on the platform is generally right in line with that, at least at this moment in time. So using that and multiplying, this 1.31% that we had here gets that revenue of $42 million. And, that's where I think they go a little bit conservative with their numbers. And they actually know that they might be conservative just given the fact that turnover might be a little bit higher, potentially 1.2x. So, they're obviously assuming that potentially out of $3.3 billion in assets under management, we might see $3.4, $3.5, $3.6 billion in principal value traded, which might actually, continue to increase this value of revenue going forwards into the future. So that's interesting, seeing them actually recognize that they might be a bit conservative on that front. And obviously, they talk a little bit about their multiple here. Our target price of 55 Canadian dollars is unchanged. That's very interesting. They didn't change it based on this incredible news from the company, and based on a multiple of 15.5x forward 2022 sales of $412 million, and that's the conversion rate, and implies a 32x multiple on essentially fiscal year 2022 EBITDA of $199 million. I think this is very conservative, guys, for a few main reasons. One, they're obviously using conservative numbers. Currently, we are at a revenue run rate of at least $600 million, in my personal opinion. And given that, we're already trading at not a 15.5x, kind of multiple, but something in the range of potentially closer to 10, which obviously decreases that EBITDA multiple as well, which makes the stock much cheaper than it actually seems. So, at today's price of right around 28 Canadian dollars, Voyager is trading at 8.8x sales in obviously 2022, assuming that $400 million, which again is very conservative. I think that's more potentially closer to 5 actually in reality, which is just crazy when you consider this is a company with 50% EBITDA margins. Next, again, they talk a little bit more about their revenue and their multiple, and they use some comparisons. Right now, Voyager is trading at 7.2x enterprise value to annualized sales, right? And again, that's based off of their conservative number of that $40 million. So be it. A company like Coinbase trades at 11x annualized enterprise value to sales. Or a company like Robinhood, 15x. eToro, 11x. They're trading significantly higher despite having less growth. So in my opinion, a company like Voyager should be trading at least a 15 to 20 enterprise value to sales multiple. Why? Because they're growing way more significantly than a company like Coinbase, Robinhood, or eToro that have already seen their exponential growth days go by. With Voyager, I think we're just at the tip of that exponential growth phase where, we're really going to start to see this growth come into the platform in the back half of this year, especially given the fact that they're upgrading their servers to handle 10 million active users at once at full capacity. Huge news. When we continue to believe management is executing well and see declining risks of another crypto winter, I agree with that. I think as we continue to stabilize here at these prices with cryptocurrencies across the board, and as more institutions continue to essentially come onto the cryptocurrency system, buy in, and really solidify the prices, the risks of a cryptocurrency winter are declining. However, we also continue to believe the industry as it is at its very early stages and will be volatile as regulations mature. Completely agree. And that's one of the big things about Voyager. They benefit off of crypto volatility. When Bitcoin goes up 10, 15, 20% or down 10, 15, 20%, those are their best days where they generate the most amount of revenue. And that is why I'm invested in Voyager, as they benefit no matter what happens in cryptocurrencies. And as they continue to expand new products and as management continues to execute, I see very, very interesting things happening to this company. So when we look at this report here by Sitifel GMP, they're obviously maintaining it at a speculative buy. I personally believe, Voyager is a company at, again, that tip of that exponential growth phase, and we'll continue to see massive, massive growth going forwards. Anyways, guys, thank you so much for watching, and have a great day.